Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty and your July 2023 real estate market update. So what's going on in July of 2023? Well, there's three things we're going to talk about. The first one is going to be inventory. How many houses are on the market compared to last year? The second thing we're going to talk about are interest rates. Where are they now? Where have they been? Where are they going? And in general, what does that mean? And the third thing, which everyone always wants to know about, is how much is my house worth now compared to what it was worth a year ago. So let's go ahead and get into that now. With inventory being the first thing we're going to talk about, the biggest statistic you need to know is that inventory is down 9.9% compared to where we were last year. Now, that is a very low amount of inventory. In fact, the biggest reason for that, we think, is because of our number two thing we're going to talk about, which are interest rates. And the reason, or the thinking, is that people who have homes that have a locked-in low interest rate are really hesitant to sell those homes and trade up, because with the higher interest rates that they would be getting on their new home, they're going to have to pay a lot more to upgrade and to buy more homes. So inventory is down 9.9%. So let's talk about interest rates. Now, interest rates today are right around 6.75 up to maybe 7%, depending on your credit and depending on your situation. That's about the same it was last month, and interest rates have kind of been bouncing around, haven't been going very much after they've shot up over the last year. Now, the Federal Reserve has stopped raising interest rates for the time being, although we do expect them to raise them again here in the future, depending on what happens with inflation. And with that in mind, interest rates have a dramatic effect, obviously, on inventory that we just talked about, and also on the buyer's purchasing power. In fact, if you raise interest rates just 1%, that reduces the amount a person can afford by 11% in terms of price. So just keep that in mind. The higher the interest rates are, the harder it is to buy, or I should say, the more expensive it is to buy something of the same value. And we would rather see interest rates come back down. The forecast, just so you know, is that toward the end of the year, interest rates will be coming down, and they're expecting them to settle somewhere in the 5.5 to 6 range. Does that mean you shouldn't buy today? No, what that means is you should buy today and then plan on refinancing sometime after that happens. And a lot of lenders are still offering a program where if you buy now, they'll offer to refinance your house up to the next 3 years or so for free. If you want a lender that does that, please reach out and we'll definitely help you connect to them. So the last thing we're going to talk about are sale prices. So what is your house worth this year compared to what it was worth last year? Well, good news, year over year, your house is worth 3.4% more than it was worth last year. And that is an average of, or median, I should say, of $336,000 across all residential single-family homes in the greater Columbus area. Something kind of interesting is that the average, or I should say the median asking price is now $400,000. That's a pretty big discrepancy, and maybe the biggest discrepancy that we've seen in a long time. And the only thing I can think of to justify that is that there are a lot more homes on the market that are higher end homes, or maybe they're not selling as quickly as the lower end homes. If you have anything below, say $400,000 or below the average of $336,000, those houses are selling very quickly and typically with multiple offers and possibly above list price. That's all again. Ryan Reynolds with Keller Williams Consultants Realty and the Ryan Reynolds team. As always, it's unlimited opportunities and exceptional experiences.